Welcome to Financial Alley. Today's video is about prepaid expenses. How is prepaid expenses treated in accordance with GAAP? What is a journal entry for prepaid expenses? Journal entry for the monthly adjustment of the expense from the prepaid. Is prepaid expense considered a current asset? And how to record this prepaid expenses using TallyPrime. Let's go in detail. What is prepaid expenses? Prepaid expenses is actually an expense that is incurred by the company, which is paid in advance for a certain period of time, and its benefits are actually utilized over a period. That means a company will have a lot of expenses for which it pays in advance, and its use is not only limited to that financial year, but will be extended to the coming financial year also. For the expense that is used for that particular financial year should only be appearing in the books of accounts, like in the profit and loss and in the income statement. The amount that is paid in advance for the period which is reflecting for the next financial year should be seen under the current asset of the balance sheet. The prepaid expenses are recorded as an asset under the current asset as their benefits are used in the future. It is not considered as an expense until and unless it is consumed. The most common examples of prepaid expenses are rent, insurance, subscription for softwares, lease agreements, etc. And how is the prepaid expenses treated according to the GAAP principles? This GAAP principle is the standards that is brought by the US. It is generally accepted accounting principles on which the bookkeeping and accounting system actually works. As per the generally accepted accounting principles, the expenses should be recorded in the books for the same accounting period for which the benefit is utilized. The GAAP matching principle prevents the expenses from recording in the income statement before they incur. That means only the expense that are utilized for that financial year should appear in the books of account for that financial year, or monthly that has to be recognized according to that particular month or year only. Any expenses that is pertaining above the financial year or not belonging to the financial year should be separated from the books, though it is paid. Once expenses are incurred, the prepaid asset account is reduced and subsequently a journal entry is made to the expense account on the income statement. This is better explained in the coming slides. This can be better understood with an example. ABC company is having a financial year from 1/1/2023 to 31/12/2023, and it enters into a 1-year rental agreement for an office building from Miller's Real Estate Company. The agreement is for $240,000 per annum. That means monthly $20,000. And the period of rent is from 1/7/2023 to 30/6/2024. That means the financial year for ABC company is January 1st, 2023 to December 31st, 2023. The payment is actually made for a period of 12 months. 6 months belongs to this particular financial year for which the books are prepared, and the balance 6 months belongs to the coming financial year for ABC company. So the books of accounts at the closing date of 31st December 2023 should reflect 6 months of rent in the profit and loss and the income statement. The balance 6 months has to be seen in the balance sheet under current asset. And the prepaid period of this rent is January 1st, 2024 to June 30, 2024. Now let's see what are the journal entries that separates this payments. We use the same example. ABC company having a financial year from 31st January to Jan 1st to December 31st, enters into a 1-year rental agreement for an office building from Miller's Real Estate Company. Agreement is for $240,000 per annum, that is paid in full, and that means monthly $20,000. Payment of rent is paid for the period of 1/7/23 to 30/6/2024. So when the payment is made, the journal entry goes like this: 1/7/2023, rent for the month of July has to be appearing in the books for the month of July. So rent expense account debited $20,000. The balance amount, it goes to the prepaid rent. That means the rent will be utilized in the coming months. So unused rent will appear in the prepaid rent account. That is $220, and to cash or bank, whichever mode of payment that the company chooses, either cash, bank transfer, or check. You can mention in this to cash or bank. If it is bank, mention bank, which bank is your company doing. To bank, then $240,000. That means the company will be paying the entire $240,000, and $20,000 will be for the particular month of June. And prepaid account $220,000. The narration is being rent for the month of July, $20,000, and prepaid rent is $220,000 is paid. And what is the effect of this entry is, in the profit and loss and the income expenditure account, 20,000 will be shown as an expense for the month of July. That means in the month of July, we will be utilizing the first $20,000, and in the books of accounts for profit and loss, it will be appearing rent expense as 20,000. The balance 220 will be shown under the current asset of the balance sheet. Current asset appears in the asset side of the balance sheet of the company. And as on 31/7 or as on 1/7/2023, this figure 220 will be shown as current asset. Okay, in the coming months, like in August, September, October, we have to make an adjustment entry which will reduce 20,000 each from this each month from this 220 until December 31. So every month 20,000 will be added to the expense account as the month comes by. And subsequently, when you pass this entry, we make a cash of 240,000 payment for Millers. So cash will be reduced by $240,000 because the entire 240 will be debited from the cash. For 240. Next, the adjustment entry would be passed for every month. That means from July already we passed in this entry. In August, we make a entry every month. August, September, October, November, December, we make this entry till 31st December, so that every month this 20 has to be added onto the expense account. So in the month of August, we make this entry as rent expense account 20,000 debited to prepaid rent account 20,000. Being rent expense used for the month of August 2023, adjusted from prepaid expense. So this entry is repeated at the beginning of the month till December 31 for the closing of the financial year, Jan to December 2023. For the that financial year, this entry will be repeated every month. The effect of this entry would be 20,000 will be added on to the expense account, and 20,000 will be reduced from the prepaid rent account. Likewise, for every month, this rent expense will be adjusted from prepaid. At the end of the year 31/12/2023, the profit and loss will show a total of 120. That means 20,000 into 6 months. 6 months is July to December as rent expense, and the balance of 120, which is belonging to the next financial year but paid in advance, will be reflected in the current asset of the balance sheet of ABC company as on 31/12/2023. So this means 120,000 is the actual expense consumed by the company on its accounting period or financial year, which ranged from January 1st, 2023 to December 31, 12, 2023, and the rest $120,000 is prepaid for the next financial year, and it will be reflected under current asset of the balance sheet. Next is prepaid expense considered a current asset? Yes. All this video we say about the current asset as prepaid expense would be shown under the current asset. Prepaid expense is recorded as a current asset. Current assets are the assets that a company plans to use it or sell it within a year when they are going in liquidation or when they wanted to have some working capital. Current asset is the one which they look for. They are actually short-term assets. They are in short-term nature. Most often this is where the prepaid expense line item is recorded, as it is short-term in nature. Any prepaid expense that is not used within a year, then it will be considered as a long-term asset. Anything which is above 1 year will be seen as a long-term asset. Within a year it is current asset. How prepaid expense is recorded in TallyPrime? This is a dummy invoice that I have made. In this, the supplier or the real estate who gives the office building is Miller's Real Estate. Invoice number is 0024. Date on which this invoice is raised is 1st of July 2023. And the rent is for a period of 12 months. Same example that we have seen before. 12 months, which ranges monthly $20,000. 20,000 into 12 is $240,000. We are paying at a stretch to Miller's. This is an invoice. We'll see how this is done using TallyPrime. Let's see how the previous example can be done using TallyPrime. For this, first we need to create certain ledgers. 3 ledgers we need. One is Miller Real Estate Company, for which ABC has to make a payment. So Miller Real Estate will come under creditors because ABC has to pay a Miller. Choose bill by bill also so that we can track the bill number or invoice number for which the payment is made. We can give the address of Miller. Choose the state, country name, PIN code, etc. if you have. I'm just keeping it because this is just a dummy for me. Then you create the prepaid rent expense which is under current asset. Under the details, and save it. Then you have rent which is under indirect. Then we go to the voucher mode. Choose purchase voucher because we need to book the expense for Miller. The supplier's invoice number was 0024 and the date of invoice was 1st July. It's already selected. We can give it as 1st July 23. Then the party name is Miller Real Estate. This screen you can just skip it by Control A. Here you can either alter, like the street name is wrong here, I can come and alter it. And direct sales tax number if you have, you can mention it here. Then you choose rent expense. The journal entry was rent expense to prepaid. So rent expense for the particular month of July would be $20,000. That is the rent that will be consumed for the month of July. So we recognize as 20,000. Rest will go to prepaid expense, that is 220,000. So the total you can see it picks up as 240,000, which ABC has to pay Miller. Choose new reference. The invoice number supplies invoice number appears here, 240,000 under a savings. Now for narration, you can mention any narration you want. So later you can have this narration as a reference. The rent on office building for the period 1/7/23 to 1/7/23 to 31/12/20, not 36/24. Okay, 34. The payment is for this period. And the next we have to pay Miller. Choose payment screen. Choose a payment screen. Choose the date as 1 July 23. If the date is changed, you can go to F2 or click on that and choose type in the date. Then you can choose the mode. I choose cash. You can choose cash or bank. Before payment, it is 500,000. Now choose to whom we need to pay. Miller Real Estate. The amount is 240,000. Against reference for this invoice. So Miller balance will be 0. 240,000 is reduced from 500,000. You can see the amount of the cash has been reduced. Now give a narration. Amount paid for Miller for office. Miller as rent for office building. 6 months is prepaid. Okay. Now next is the adjustment entry. First we have made an entry for booking the expense. Then we made a payment for Miller. Next is the adjustment entry. Now till this, what is the effect I will show you. We come to balance sheet. As on 1st of July, see, prepaid rent is 240,000 is the prepaid expense, prepaid rent expense. That means we haven't utilized this 220,000 as on July. Only 20,000 has been recognized for 1st of July. Now in balance sheet, no, not in balance sheet, in the profit and loss, you see rent expense 20,000. Again, we make the adjustment entry every month, 1st of every month, because the invoice was for 1st of the month. You can make either in the 1st of the month or 31st of that month. I mean the last day of the month. Go to voucher screen, choose journal entry. Now you choose prepaid, no, not prepaid, rent account, because you have to recognize the rent. So before utilize, only 20,000 is recognized for the month of 1/8 we are doing. 1/7 we already did. July we already recognized, that is the rent expense 20 which is appearing here. Again we need the rent for the month of August. August we are using another 20 credit to prepaid. Prepaid rent expense by 20,000. Before it was 220, now 20 we have utilized. So 20 will be reduced from prepaid rent expense. This entry we will have to give every beginning of the month or at the end of the month. Okay, beginning is what I choose because the invoice was for the beginning of the month. And you can do this in the month of July itself by making a post-dated entry. July, when the payment is made, you can make this entry for all the coming months and make it, remember to make it as post-dated, otherwise it will affect the date in your books of accounts. Choose 1st of August. This is I'm making an entry in the month of July. Assume that I'm making the entry in the month of July. So August hasn't come yet, so I make a post-dated entry. So every month this will be appearing monthly. Okay, this entry has to be repeated for every month till December. So rent expense account debted 20,000, the rent expenses another 20,000, so 20 will be reduced here. So we will give us August rent utilized from prepaid expense. Likewise, we will do it for every month till December. So next we will choose for 1/9 September, make it as a post dated, choose rent expense 20. Here we see 40 now. For September we are giving credit prepaid rent expense 20, and this is rent used for September. Again we give for October 1/10/23, make it as post dated. So rent expense 20,000 from prepaid rent expense 20,000. This doesn't change because I have done it only for 2 months. At the end of the date, I will show you how this rent will affect. This is rent used for next. I change it for November 1/11/23. Rent expense. Make sure you make it as post dated because we are making an entry before this November 21. So make sure you make it as post dated. Okay, we make it as 20 and rent expense as 20. Credit prepaid rent expense. It is rent used for November. And next is the last prepaid expense on rent for December. Just post dated rent expense 20, prepaid rent credited 20, and this is the rent expense for December. And save it. Now let's see what is the effect of these entries on the books of accounts as on 31. Let's see the balance. This is still on 1 July. We change the period on 31/12/23. Click on detailed view. See, now the prepaid expense account shows just 120,000. This 120,000 is belonging to the next financial year, Jan to June 2020. 120,000 belongs to that 2024 financial year, which is actually prepaid. You can choose the period as 1/1/23 to 31/12/20. If you drill down means you enter it. You see, August you have made it as a prepaid 220. August, September, October, November, December, you have utilized 20 each every month. Now this is the effect on the balance sheet of ABC company. Now what we see what is the effect of profit and loss account. Change the period of 1/1/23 to 31/12/23. That is the financial year for ABC company. In this, go to the detailed view. You see that the 120,000 is the total rent expense for the year 2023. If you drill down, enter it, you see July 20,000, August 20, September 20,000, October 20,000, November 20,000, December 20,000. Likewise, we have utilized the 6 months. So the adjustment entry that we make as an effect of separating this amount monthly. That means monthly when you go for the expense account, you will see only the 20,000 because that particular month has used only 20. So each month has to see this 20 separately. So at the end of the December 31, we will see that you have utilized each time when you make the adjustment entry, it reduces. So at the end, the closing is 120. This 120 is a total expense that you have made, and this 120 will be reflected in this 120 which you see at the closing will be reflected in the current asset of the balance sheet. So this is the total expense for the year Jan to December as rent expense. And the the prepaid appears in the prepaid rent expense under the current asset side of the balance sheet. Thank you. Hope you have understood the concept. Thank you for watching my video.